Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing an important update about the economy and the investment market so you can understand what we see in the global landscape. You know, the last couple of weeks have been a little bit bouncy. We saw about a 2% sell-off in that range last week. Nothing to be concerned about. One of the things that we look at as an investment firm is, first off, we don't make knee-jerk reactions. We don't act emotionally when we manage our client's portfolio. We use a strict strategy and we use fundamentals. So let's talk a little bit about fundamentals. We look at earnings. Earnings drive equity prices and valuations often. If we look at earnings that are coming out for the second quarter of 2014, approximately 70% of companies are meeting or exceeding expectations. Earnings are growing between 8 and 10% so far that are coming in for the second quarter of 2014, and revenues are growing around 5%. So you're getting sales growth, you're getting earnings growth. Does that mean that the stock market just goes straight up in a straight line even though that's occurring? No. Sometimes you get a pause that refreshes. I firmly believe that's what we're seeing right now. Equity valuations, generally speaking, are not stretched. We're not in a bubble territory, but yes, can we have another 5% sell-off? We sure can, and that's pretty commonplace and natural in any bull market. Again, fundamentals drive valuations on the long term. You're always going to have short-term fluctuations, and I firmly believe that the fluctuations we're currently seeing are really more related to Russia and some of the sanctions and the nervousness around Russia. Is that going to be a big impact on the overall world economy? I firmly believe not. In fact, hopefully the Russian government will come to their senses and maybe do what's right so those sanctions can be lifted on the intermediate term. But generally speaking, we like what we're seeing in the world economy. We like what we're seeing in earnings growth and revenue. That doesn't mean that we're not going to get little bounces in the road. I'd like to tell all investors that everything always goes straight up, but that's not the case. One of the things I want to stress a lot, and I've seen a few calls on my TV and radio show with questions on this, is these short-term bounces. Do you sell into these? What are you doing as a firm? We're basically doing nothing. Again, I go back to emotions and knee-jerk reactions are going to get you into trouble. A lot of calls that come into my radio and TV show come from people who either manage their own money or they're listening to the wrong people and they're getting a lot of different opinions, so they're jumping all over the place with their portfolio. That's a recipe for disaster, and an investor who uses emotions, no investment strategy, and the opinions of others who are not experts in the field are doomed to have mediocre returns and take more risk. Again, bumps in the road are going to be natural and common. I fully expect those not only in how we manage portfolios, but for any investor, whether conservative or more growth-oriented. We like what we're seeing. We like where we're currently at. That doesn't mean that we won't make adjustments to our portfolio or go more conservative if the fundamentals and our technical indicators dictate to do so. But right now, we like where we're at. If you're a client of our firm and you have a question, call us with your questions. If you're not a client of our firm and you want real money management without the conflicts of Wall Street, call our firm for consultation. There is a difference. We invite you to experience it. Have a safe and profitable week. Make sure you listen to my live TV show on Wednesdays and also our live radio show on Sundays from 10 a.m. to noon Eastern.